The difference between impact investing and traditional investing, provided there is such a thing as traditional investing, lies in my view on what is ultimately the business model that is financed. In impact investing, there is a clear strategy towards funding business models and companies that are building and scaling solutions for the world's most pressing social and climate or environmental challenges. That would be the difference. There are a number of them. There are a number of cliches in the industry. I think that the one I hear most, and fortunately less and less, but still prevailing cliche in our industry, is that sustainability cannot deliver financial performance. So at the EIF, we've been investing in the space for more than 10 years. So we now start harvesting the fruits of our investments, and we do see that there is a positive correlation between impact performance and financial performance. So both are not mutually exclusive. As in any investment industry, it is about having the right skills, experience, strategy to actually pick the best who will be able to generate both financial performance and impact performance. Difference between the industry today and 10 years, as how it was 10 years ago, is massive. When we started investing actively in the impact investing space at the EIF 10 years ago, in 2013 or so, effectively we only had a handful of impact funds in our deal flow and in our pipeline. And today, actually, we are confronted with, so to give you some figures, perhaps in 2013, we received between 5 and 10 proposals on impact every year. Today is closer to 150 to 200 a year. So if there is one single difference between how the industry was 10 years ago and where it is today, is definitely much more crowded, which also means much more professionalized, more sophisticated team, and a genuine balance between strong investment skills and track record, which is a big keyword in our business, but also a genuine drive to generate impact. So that gives me a lot of confidence for the future. The missing bit in the industry, in my view, is there's certainly a number of things missing, but the one missing, in my view, is a big headline. Like, I would so much fancy that in generalist newspapers, generalist news websites, we would get to see the next big impact company that has solved, I don't know, issues around ocean cleansing, around child mortality in Africa, for instance. So at the risk of sounding a bit cliche myself, I would say we are missing the Google of the impact space, so that impact investing no longer belongs to the professionals of the investment business, but that impact investing actually hits the headline and gets known to way beyond the financial industry or the investment industry. SDGs are important to our assessment framework because I think it is very much like some kind of alphabet, some kind of common language for sustainability, for social justice, for climate action, and again, sustainable development goals, as the name implies. They're important because they provide some kind of common framework, common language across industry players on either side of the Atlantic Ocean, the Pacific Ocean, in Europe. So that's very important, but they're not enough, in the sense that it is an interesting and super relevant mapping tool, but it also became, I cannot remember seeing an impact fund proposal for our consideration and for that is submitted to us for investment that does not refer to SDGs. So they're important, but they're not enough. In order to drive more capital to the industry, investors should first and foremost, in my view, consider very carefully what are their short-term, medium-term, and long-term objectives, because smart investment decisions in 2023 cannot only be about generating fast or exclusively financial performance. Because of the summer we're experiencing, the the social situation that is prevailing in many member states in the EU, prevailing worldwide, I think it is not wise to only assess the quality of investment through the Googles of financial KPIs. So I think factoring in impact is actually the only wise decision in the long term when it comes to making a smart investment decision.